Imagine you're standing in front of a blank canvas. It's clean, untouched, full of possibility. That canvas is your first $1,000. Investing doesn't have to feel like Wall Street chaos, flashing red numbers, or complicated financial jargon. Instead, think of it as art. You are the artist. Your money is the paint, and your future is the masterpiece. Today, we're going to paint your very first $1,000 portfolio. Slowly, intentionally, beautifully. First, we begin with mindset. Before you buy a single stock, before you download a brokerage app, before you even look at a chart, you need the right frame of mind. Investing is not about getting rich overnight. It's about patience. One of the greatest investors in history, Warren Buffett, didn't build his fortune in a year. He built it over decades. And he followed principles taught by his mentor, Benjamin Graham, principles centered around discipline, value, and long-term thinking. The biggest advantage you have as a beginner? Time. Your first $1,000 isn't about making a fortune. It's about building the habit of ownership. You are no longer just earning money. You are making money work for you. Now let's define your theme. Every painting has a theme. Every portfolio should too. Ask yourself, what is this $1,000 for? Is it long-term wealth building? Is it financial independence? Is it learning and gaining experience? If your goal is long-term growth, you can accept more ups and downs. If your goal is short-term stability, you'll want safer strokes on your canvas. Clarity creates confidence. Now we choose our colors, the assets. With $1,000, you don't need complexity. You need balance. Here's a simple beginner-friendly structure. 40% in strong, established companies, often called blue-chip stocks. 30% in a broad market ETF, something that tracks the overall economy. 20% in bonds or bond ETFs for stability. 10% kept in cash for flexibility and opportunity. This mix gives you growth, protection, and optionality. You're not betting everything on one color. You're building harmony. Let's talk about stocks. When you buy a stock, you're buying ownership in a company, not a ticker symbol, not a trending headline. A real business. Look for companies with consistent profits, manageable debt, and products people will still need 10 years from now. Think long-term brands, essential services, strong leadership. Companies that focus on fundamentals, like those held inside Berkshire Hathaway, prioritize durability over hype. Avoid chasing trends. Avoid buying just because everyone else is. In investing, popularity is not a strategy. Now let's talk about ETFs. An ETF, an exchange-traded fund, allows you to buy an entire basket of companies in a single purchase. Instead of picking one stock, you're buying the market. For beginners, this is powerful. It reduces risk. It simplifies decisions. It gives you instant diversification. If one company struggles, others may thrive. It's like using multiple shades instead of relying on a single color. Now, the part most people underestimate. Emotion. Markets move up. Markets move down. When the market drops, fear whispers, "Sell before it gets worse." When the market rises quickly, greed shouts, "Buy more before you miss out." But emotional investing leads to poor decisions. The difference between successful investors and struggling ones isn't intelligence. It's discipline. Create a plan before you invest. Decide your allocation. Decide your time horizon. Decide your rules. Then follow them, not your feelings. Let's discuss risk. Risk isn't the enemy. Unmanaged risk is. Stock prices fluctuate daily. Interest rates change. Economic news influences markets. Regulatory bodies like the U.S. Securities and Exchange Commission enforce rules that can shape industries, but volatility is normal. It's part of the artistic process. Think of market dips as shadows in your painting. Without shadows, there is no depth. Without volatility, there is no return. Now let's talk about one of the most powerful forces in finance, compounding. If your $1,000 grows at an average of 8 to 10% annually, and you reinvest your gains, your money begins to grow on top of its own growth, year after year. That's layering. At first, progress seems slow, almost invisible. But over time, the effect becomes dramatic. Compounding is not exciting. It's not flashy. It's quiet power. And it rewards patience. Here's something important. You do not need to time the market. Many beginners wait for the perfect moment, the perfect dip, the perfect headline, the perfect conditions. But the truth? Time in the market beats timing the market. Starting today with $1,000 is more powerful than waiting 2 years with $2,000. Momentum favors action. Now let's cover common beginner mistakes. Trading too frequently. Checking your portfolio every hour. Following social media tips without research. Investing money you can't afford to leave untouched. Your first portfolio is not about aggressive speculation. It's about foundation. It's about education. It's about building investor identity. Let's simplify the practical steps. Step 1. Choose a reputable brokerage platform. Step 2. Fund your account with your initial $1,000. Step 3. Allocate according to your chosen structure. Step 4. Reinvest dividends. Step 5. Review your portfolio once or twice a year, not daily. Keep it boring. Boring is profitable. Over time, add to it. Another $100 next month. Another $200 next quarter. Consistency transforms small beginnings into powerful outcomes. The habit matters more than the amount. Now pause for a moment. Think about what this really represents. That $1,000 is not just capital. It's a shift. You move from consumer to owner, from spender to investor, from reacting to markets to participating in them. That psychological change is priceless. Investing is both science and art. The science is numbers, earnings reports, and diversification. The art is patience, emotional control, and long-term vision. Master both, and you create something meaningful. Your first $1,000 portfolio will not be perfect. You will learn. You will adjust. You will improve. And that's exactly how mastery works. Every great artist started with a blank canvas. Every great investor started with a first dollar. Today, you have your first 1,000. The question is not whether it's enough. The question is whether you're ready to begin. Because the masterpiece isn't built in a day. It's built stroke by stroke, year by year, decision by decision. Your canvas is waiting. Pick up the brush.